Buckle up, tell your family to prepare. All hell is about to break loose. We're going to talk about who said that here in just a few minutes, a little bit later in this video. My timeline on this whole thing is October. I do see a red October approaching. So, in my opinion, we're only a few months away from something big, and it could be before that. So, I'm not saying it's definitely going to be October, but I do see something huge coming down here in the next few months. We're going to get into all the details. Please make sure that you are subscribed and hit that notification bell if you haven't already, because we don't want to miss anything in this environment. Things are very busy, a lot of news coming out, a lot of things that I want to get caught up on today. So let's go ahead and get right into it. We're going to start right here. Some of you are very, very happy right now. My latest investment that I mentioned earlier this month was going to be shorting GameStop. And if you would have followed me, I think some of you probably watching right now followed me on that. You would have shorted this, and this was what I did via put option. I shorted it at $44, and we're down to 24.70 right now. So we're almost doubling our money if you sold this put option today. My put option doesn't expire until close to the end of August. So congratulations to those of you that followed me on this. I've got my chart up here of the different trades that I've mentioned on this channel. There's not a lot of them, but my last 9 trades have all been winners, right? So thank you very much. It's one of the reasons I don't invest a lot is because I wait for no-brainer opportunities. If you're always investing and you feel like you have to be investing every day or every week, you're more likely going to lose, I think, than you will win. Because if you're just looking to invest no matter what, or trade no matter what, it's not a good plan, in my opinion. If you wait for the best opportunity, just like everybody waiting for the housing market to crash, maybe it'll never crash. But the people that did wait for the housing market to crash back in 2008, when the bubble was starting to come undone, those people found the best deals in 2009, 10, 11, 12. Those were great years to buy a home. And those were no-brainer times to buy a home. Now, I wouldn't be investing in real estate. There are some people that are, and maybe they'll end up being right if we see inflation continue to go up, and away into the stratosphere, to infinity and beyond. But I think there's going to be some monkey wrenches thrown into the gears that we need to be careful about. But either way, we're going to make money, right? Because if you're in the stock market, if the market continues to go up, if inflation continues to skyrocket, if they continue throwing gas into the fire here via money, just helicopter money, more printing, more debt, then we're going to make money because we're still in stocks. I'm still in stocks. I'll make more if we see a crash because I'll lose a little bit on the stocks because I don't have a big, huge position in stocks, but I'll make even more buying on the dip. And for those of you that have cash, you know what I'm talking about. If we see a deflationary scenario unfold where everything goes on sale, prices crash, prices fall, then we're going to be doing even better. So we're going to make money either way. That's kind of my view on this. Prepare for both scenarios. Have something invested in the markets, and if inflation continues to rise, you're going to make money. But if we see a crash or correction or some black swan thing come down here and causing a massive deflationary situation, then you're going to make even more money because you also have cash, right? But if you're all in cash, or if you're all invested, if you're all in on the markets, and then what you think is going to happen doesn't happen, you've opened yourself up to a lot of risk there, right? So I try to play both scenarios, inflation, deflation. Either way, we're going to make money. So congrats to those of you that followed me on that GameStop short earlier this month. And let's talk about some other news, though, right? Because we want to invest. We want to take advantage of the situation here with the inflation, right? We want to ride the bull, but prepare for the bear. And here's something that came out just recently here. I'm not sure if you guys saw the interview, but it was Edward. And what's his name? Let me give you his correct name here, because some of you will correct me on it. Egon Van Geyers. Quote, "We're at the end of a monetary era. A number of dominoes will keep falling, initially, gradually, and then suddenly." And I've said that here in this channel. That's a famous quote, and we'll get into it. Initially, gradually, and then suddenly, as Hemingway explained when asked how to go bankrupt. Some of the important dominoes the world will see falling are political, geopolitical, currency, debt, investment assets. The consequences will be unthinkable. social unrest, war, hyperinflation, deflationary implosion of assets, debt defaults, and more. It's pretty interesting that he put hyperinflation along with deflation or deflationary. So maybe he sees hyperinflation first and then all of a sudden deflation when something breaks. Let me know what you think about that. The consequences will be unthinkable. When things settle down, there will also be an offsetting forces such as emergence of the powerful BRICS nations likely to be backed by commodities. Gold will play a major role in this process. Both central banks, foreign wealth funds, and investors will turn to gold as a stable part of a crumbling system. I think it's going to be silver also. We'll have to see. I mean, if it is, and if it isn't, we're going to make money because silver's still going up, right? Another investment here on this channel. We told you below $15 an ounce, grab silver, stack, right? I've been saying that for years. Now you've doubled your money on silver in just a few years if you got in at that time. Now I've been buying all the way up to 20, 22, 23. After it got past 25, I slowed down my purchases. But either way, you know what I'm saying? You're still up a lot if you invested back when we first started talking about it. Even for people buying today, I think silver is going to go to 50, 100, 200, and beyond. Just my personal beliefs and opinions, because I do think that we're going back to a commodity slash metals backed system of money eventually. Eventually. I'm thinking maybe 3 to 5 years. Before that, though, we're going to see, I think, a lot of inflation, possibly even hyperinflation. Unless the black swan comes in. Nobody knows exactly when it's going to come in. That's why it's okay, because you're prepared for both scenarios. You're prepared for the deflation. You're prepared for the inflation. What we try to focus on here on this channel, in addition to going over the news. Of course, the news is important to follow, but if you're not taking advantage of it, you're not doing as much as you could be. If you're just listening to the news for entertainment, that's great. But if you're using this to your advantage, investing, right? That's the kind of the thing I want to encourage people. I don't want to give you advice because you may not have money to invest. But if you can, I would strongly consider. I would strongly have you consider doing that. Consumer sentiment just fell to a 7-month low. So we're being told that consumers are resilient and strong, and we hear that again every week. Another talking head just came out and said consumers are strong, but yet consumer sentiment fell to a 7-month low. The University of Michigan Consumer Sentiment Survey plummeted to its lowest level in 7 months. The index reading for June came in at 65.6, down from 69.1 in May. And that's a pretty big drop. So folks see what's happening. They don't see inflation coming down. They see all the risks out there. And consumers are not very confident right now. If consumers were strong, if everybody was fine, why would we see this drop to a 7-month low? It should be getting better and better as we go along. But it should drop because for most consumers, not everybody, but most consumers, 70+%, things are getting worse, meaning people are going further into debt. And just scraping by and borrowing from the left to pay the right, robbing Peter to pay Paul, essentially. All right, let me transition a little bit here. Let's talk about what Janet Yellen said recently. Treasury Secretary Janet Yellen. Here's what she said. Let me bring this up here. The U.S. debt load is reasonable. It's in a reasonable place if it remains at this level. First of all, debt isn't going to remain at this level. Have you seen the increase in the debt? So why would the Treasury Secretary even say anything so ridiculous, right? To me, that's scary. Right, this is a person in a very high position, a very important position, Treasury Secretary, yet she thinks that somehow the debt is going to remain in a reasonable place. How is the debt going to remain reasonable? It's already unreasonable, right? We're creating $1 trillion worth of new debt every 100 days. And the further we go, the longer we go into the cycle here, the worse it gets. Pretty soon it's going to be $1 trillion every 90 days, and pretty soon it's going to be $1 trillion every day if this continues. They're predicting 50 trillion by 2030. I think it's going to be much higher than that unless this whole thing implodes. But for her to come out and say that, I mean, what do you think about that? To me, that's pretty scary, pretty concerning. She said that a few days ago. She said on Thursday, swelling national debt is manageable as long as it stays around where it is relative to the rest of the economy. In an interview, Yellen also noted that high interest rates are adding to the burden, right, to the $34.7 trillion debt load. Well, of course, that is adding to the burden, but it's also preventing inflation from going up even more. The cheaper the money is, the lower the interest rate is, the more money people can borrow, right? And remember, we were the only channel, I think, in all of YouTube land that I know of to tell you that the housing bubble wasn't going to go bust. We told you the 0% interest rates were coming. I had said that other things may come out. I predicted a 40-year mortgage at some point. Maybe that'll still happen, but 0% down mortgages are back. Rescue programs are still here in many cities and are coming back in other cities. Veterans are getting assistance right now. The government coming in buying most of the mortgages off the non-bank lenders who make up a bulk, who make up a majority of all mortgage lending right now. I told you all this was going to happen. I don't think any other channel told you that. I was looking back at some of the big YouTubers, economic YouTubers. Some of them, this is their only gig, right? I happen to work in the financial industry, so this is kind of my side thing here, this channel. There's many, many YouTubers, several that only do YouTube, economics, financial, and I found more than 5 that predicted a housing crash starting back in 2021. Some of them started saying in 2022. Most actually 2022, they said this was going to come down, and this is their full-time job. It's crazy, right? So again, the only channel here I think on YouTube to say that the bubble wasn't going to go bust. Home prices recently hit another all-time high, right? Until they stop the easy money coming out of the banks, until the government stops buying the mortgages, and still until investors stop buying most real estate in many states, including California, 0% down mortgages, they have to go away in order for this bubble to go bust. There has to be a cutoff or a severe restriction in the supply of money that's being loaned out. And a lot of things have to change with the banks, right? Because as you know, banks are just loaning out money now without having to have any in reserves. The emergency measures that were put in back in 2020 are still here. And what have we said here in this channel? Another thing that we predicted 100%, we said rescue programs, once they're implemented, it's very seldom that they can just be taken away. They might try to take them away, but they usually have to be put back into place. Look what's happening with rents. Since the rent moratoriums were ended, we're seeing late rents rise. We're seeing rents finally drop. How long will they let that last before they re-implement the rescue programs that we had in 2020? Right? Some cities still have them in place. Keep in mind, and even with that, we're still seeing rents drop in many cities. So this is the type of thing, folks, we have to think about. Think about the odds, what the risks are, right? All these things. Well, let's go ahead and get into some other news here. We have a media outlet, a major media outlet, the Daily Beast. Sorry, Daily Beast. I don't know why I said that. I was looking at an R. Let me bring up the headline here. I was imagining an R being in between the B and the E. So the Daily Breast, no, the Daily Beast. I'm not going to edit this out. I'll just leave that in there. Layoffs at the Daily Beast. We're seeing lower ad revenue, and I think that's probably the thing with the Daily Beast. And that's another sign of consumers cutting back on the spending. I'm seeing lower ad revenue here on YouTube. I think many advertisers are cutting back, pulling back on the advertisements because many consumers don't have the money, right? So I think they're being very careful. Just out, we have the retail sales numbers. Retail sales barely increased in a sign of consumer strain. That's how Bloomberg is putting it. U.S. retail sales barely increased. So we're seeing a big slowdown in consumer spending. It's still increasing month over month, but the amount of increase is very minuscule compared to previous months, especially going back late 2023. And this is another sign, right? Banks are still loaning out money. They're not lowering credit limits for the most part. Maybe a few of you have seen your credit limits drop. Let me know if your bank has lowered your credit limit on your credit card. I'm thinking maybe a few people, but for the majority, I think you're seeing your credit limit stay where it is. And some people are even seeing higher credit limits, even though debt is at all-time high right now. So you would think with debt at all-time highs, heads and tails above where we were in 2008, not just total, but per person, per capita, you would think banks would be pulling back and being more cautious. Just the opposite. They're keeping the credit flowing because I think they know they want to keep this economy looking good, hopefully to the end of the year. I'm thinking that's their plan. But consumers are pulling back. Retail sales month over month barely increased. And let me see if I can get some text for you behind this here. Barely rose in May, and prior months were revised lower. So that's another thing too. They go back and revise these things lower. So what looks like a small increase now could possibly be a drop. Right? We'll have to see what happens next month and the backward revisions, downward revisions, usually most of the time. The value of retail purchases, unadjusted for inflation, increased 0.1%. I can almost guarantee you, if we look at this next month, it's going to be a drop. Right? That's the type of things, that's the type of shenanigans that they're playing out there. They want you to look at the number, and by the time the next month gets here, they're going to give you the new number, and you'll forget all about the false number that was put out the month before. And it's another way to make everybody think the economy is doing good. Imagine if they were honest on these numbers, how much consumer confidence would have dropped. Right? It already dropped to a 7-month low. If we were given honest numbers and figures, and if you were given the economic reality behind the situation, consumer confidence might drop to a 10-year low. Who knows? Right? If things were honest, if the real numbers were put out there. Right? Insane, folks. So let me know what you think about all this down in comments. I'll be looking forward to reading your comments, everybody. Please make sure you subscribe. Come back for more. Going to stay ahead of this economic curve. Congrats on those that followed me on the trades. Thanks, everybody. Big love. Keep stacking. Bye for now. Peace.